Alrighty, welcome back everybody. Just getting out of the Easter holiday here. It is April 19th, 2022, Tuesday that is. And we're going to get started here with our pre-market analysis on the S&P 500 futures market. We don't have much to say on the higher time frames. So when we jump up there and we look at our quarterly chart, our 3-month chart, we look at our monthly chart, and let's stick with these two real quick. Quarterly chart, as you can see with this new bar that we're in right now, we're still just basically right in the middle of the range right now. And there's no new information to talk about. So can't say anything up there. Monthly as well, we're just sitting here in this the new April bar here, kind of trading within the top 50% of last month, for whatever that even means, right? For whatever that's worth, we're kind of just trading up in there. And so there's really not much else to say here either, because we haven't broken out to the upside or the downside here. So we're going to skip over that stuff. The one new thing that I'm noticing here on our weekly is that as the market starts to pull back from that major high we made a few weeks ago, we're getting a potential bullish divergence off the low. So again, for whatever it's worth, we're seeing it start to build up. Remember, with this type of pattern, because we are so far from the major low that we're comparing, there is a lot of room for the market to continue to sell off into, and we would still be able to make some type of bullish argument. So again, for whatever it's worth, we're starting to see a potential bullish divergence form off of that bottom of that weekly bar right now. Just like we said back up top, we did start to see a potential bearish divergence off of the highs back at the end, basically the end of March going into April. And then from there, we did get the sell-off. So again, where are we actually going to find that low, that bottom to actually turn? That will be the question. So again, that's what we're seeing here on the weekly. Nothing too exciting going on. Come down to our daily, and we talked about this last week. We do have basically two fib schemes here. We have the actual leg itself from this low around 41.2950 up to the high we made again a couple weeks ago at the end of March there. And then we have just the whole thing from the actual major low down there at 40.9450 all the way up to the high we made a couple weeks ago, again, end of March. So those two fib retracement legs gave us a 50% retrace just around 43.80. The market did come down just below 43.80 there by maybe 2 or 3 points, broke through and got a nice appreciable bounce off of that 50% retrace. But as you can see, the bears jumped back in and started pulling it back down, and we came down into arguably the 50% retrace of, again, the whole leg from the major low at 94.50. So we are sitting right around that 50% range. We do have what looks to be a potential reversal bar there coming off of that low on the daily. We don't have any type of bullish divergence, but that's what we're seeing up here. Now, again, I didn't think there was really much else to add to the picture, and as you can see, there's really not much else. So we have the 61.8 down right off of these major highs that we're watching, right around 43.15 to 43.20 here. That would be my next larger target to the downside. So you do have, again, somewhere around 43.15 to 43.20, give or take a few points on either side there. That would be that little zone that I'd be targeting if we continue to sell off. That would be my larger target down there to 43, again, I don't know, 15, 43.20-ish. And we do have two structure zones that break right there. We have basically 43.30s area, but then down into that 43.11. So this whole little pocket down here looks nice and ripe if they continue to sell off. And this morning we do have a nice clear bearish divergence off of that high that we made in the overnight session. And that high we made in the overnight session, if you take a look at this whole leg down from the highs from, what was that? Guess the highs of last week. If you draw fib across there, we came up, and you can see yesterday we came right up into the 50% retracement and just could not break through. In fact, I came in here yesterday morning. We did not trade. I did not run the trade room, but I did come in before the market opened and map out the important levels here. I just want to show you. I mapped out this major swing low here at 44.03 up into 44.0550, which was 50% of the whole sell-off there. And look at where the highs were yesterday. We came right to that swing, that major swing low from back here, came right back into it and got a major rejection and ended up closing, I don't know, this bar closed about 20 points lower. So a nice, just about 20-point pullback right off of that level almost to the tick. In fact, the high was 0.3 quarter. The swing low here was 0.3 even. So one tick into the level and a nice 20-point pullback from there. And then we came back up and retested it again. So this was around the open. If we go back to the 512 tick chart and look at what happened here yesterday, I mean, couldn't have worked out any better. Look at this level. There it is right there, 44.03. Market kind of chugged out of the open, started pushing, came right to 43.97, pulled back right to the fast moving average, and then pushed up, pulled back to that fast moving average again for a bounce. And then we got a nice little retracement and a push right to 44.03 quarter. So there's that shaded region there, right to the first level. And then here's the pullback. Came all the way down, held VWAP on two tests, and then came back up and got rejected from that level two more times. I mean, almost to the tick on each test. And then from there, again, the first expected resistance zone that morning, again, we didn't trade, but I did map it out beforehand. First expected resistance zone, we came up, failed, came up, failed, came up, failed, and then pulled back. We held our orange power level within a point or two, and then came all the way back up to fail once again at the top end of our expected resistance zone within a few ticks. And that was yesterday. It was just up, down, up, down, up, down. And now this morning, you see we're still just stuck within all of the chop from yesterday. So this is a pretty ugly market. Probably not the best place to be trading right now, especially right inside of this chop zone. But let's take a look here. Looks like we might be getting a little bit of a wedge coming across here. Something like that right now. I mean, we're looking at this on this 512 chart, so you know it's going to be hard to zoom out and see the bigger picture. So let's go back, and I kind of digressed there, but I thought it was worth mentioning that we did have this level expected as a resistance, and the market came right into it and failed from the bottom end level and the top end level within a few ticks. So let's go back here now, and let's look at what we're dealing with this morning. So right now we do have a nice little bearish divergence off of the high we made here in the overnight session. Not the overnight high, which is up at 44.11, but from this most recent high we made where we got this rejection here in the last hour. That could lead to a continuation lower. We do have, remember, the 4-hour bearish divergence from the actual overnight high at 44.11, and then again on the bounce to come back up and potentially come back to test the overnight high, got another bearish divergence on the shorter time frame. So for whatever that's worth, we do see there's a lot of trouble in trying to actually push higher here. And let's start talking about the levels we want to deal with this morning. Go back to the 4-hour really quickly here just to see if there's anything else sticking out, and no, nothing else to talk about on the 4-hour. So let's go ahead and look at the levels we have to deal with this morning. Here's the thing. Everything within yesterday's price action is going to be, there's going to be a lot of chop, a lot of levels in here that all make good sense. So let's, we'll talk about those, but let's look at what we have to the extremes on either side. So if the bears take this market lower, we get through the overnight low, which was 43.71.75 there, and then they can come down and get, and I'm going to get rid of this line because at this point, well, you know something? I'm going to keep that up there because that is a pretty critical level that did hold in the overnight session from yesterday, and then we finally got through and kind of basically held above it there on the two tests from those two major swings yesterday. I'm going to leave that there just as a reminder that we do have a pretty good little area right there where we had some pretty strong resistance and then pretty strong support once we broke out and pulled back to it. So getting through the overnight low, getting through around 67, 61, and the previous daily low down there at 55.50 is going to open up levels down below us. So if we do break through these two or three little tight levels here, we're looking at back down to 43.48 to 43.50. So a nice another 5 to 6 or 7 points lower if we do break the previous daily low. And then from there, there's probably some little minor levels in here, but the next most relevant thing I'm noticing is if 48 breaks, it's a pretty nice shot down to 24.50. Keep in mind 24.50 is a major eye level. So this level will work to the tick all the time, but keep in mind that this is a major structure zone. So it might not be pretty. It might actually use it to the tick, but it might get a little messy around here because it's, again, a large structure zone. So you can't expect it to be perfect. Even though we do see time and time again stuff come right into major eye levels and work perfectly, I just want to warn you that this is kind of a zone down here. We've got a good level at 18. We've got this range around 21 to 26. The 27 extension of that major leg we were looking at brings us just in front of the zone there at 28. So we do have this pocket right here that to me makes sense for some potential strong support if we get down there. So a good place to take profit if the market does end up selling off pretty heavy here. And again, the expectation would be for some type of support if the market makes it down there. Any breakthrough there, and we've got everything else here. 06, 43.06. We've got a major swing at 42.90, give or take a few ticks. And then we've got 84, 42.62, 42.56, and then we're into the next major structure zone down here around 40 to 44. And let me go ahead and draw the correct one there. Somewhere right in there. Now, are we going to make it down another 150 points this morning? That's anyone's guess. Who knows? We could have news drop at any moment that could change the whole scenario. But that's what we have below us. For the next 150 points, you should have some good levels of expected support, which are good areas to take profit if you are short. Let's go ahead and look above us, and then we'll talk about everything going on within all of yesterday's price action, because there's just a whole bunch of crap down there inside there. So up above us, if the market goes ahead, and let me get this situated here, if it goes ahead and breaks through the overnight high and the bulls are strong, start ripping here, 44.15 to 44.17 here could be a potential trouble spot for the bulls. It is a minor eye level, and it's also the 61.8 retrace of this sell-off from yesterday or 2 days ago, I guess Friday's highs. So keep that in mind. Any further than that, the bulls will be contesting with 31.25, 45.50, and then right back to our major eye level up here at 44.54, which let me clear my throat, we came up to and failed multiple times back last week, and even came down and held it from the upside. So that will be important for the bulls to get through there. And then we've got 67, 44.74 to 77. That should sound familiar. How many times we have these pockets between 74 and 77 in a number of different areas. I think there's a good 43.74 to 77. I'm mixing them up, but I think it's 45.74 to 77. Yeah, 45.74 to 77 and 44.74 to 77. So we've got that pocket there. And then if that breaks, you can see it's a pretty nice almost 20-point shot all the way to 44.96, 4,500. And then we're almost up back right to the next major structure zone at 45.13. So those are the levels above us and below us. Let's talk about what's going on within yesterday's price action. So let's go down to the short time frames, or the intermediate time frames, to our 10-minute chart and take a look at all the details. What do we got in here? We're holding 50% of yesterday, the magenta line, which happens to be our minor eye level this morning. We've got the orange power level in the VWAP that we're holding below right now. And coincidentally, I put this line up across here. You can see it's a dash dot dot line coming across right where we failed from this morning. That line was a retracement level from yesterday that was relevant. So yesterday when I mapped out the zones, again mapping out 4403 and 440550 here, I put a fib up and the fib level looked pretty interesting to me. I believe, yes, it was the 38. Just by coincidence this morning, I don't know why it ended up working so well, but just by coincidence we came right to that level this morning and failed in the overnight. Now, do I think that that level is relevant now just because it was a 38% retracement from yesterday? I don't think so, but it seems just by coincidence, like I said, that this area right here, right around say 92 to 94 here, does look to be a pretty highly reactive zone, regardless of where it originally came from. So we did come down in the overnight and hold it once, almost to the tick and bounce off of it. And then we probed through it, but then held above it. And then in the overnight session, we actually came up and failed from it multiple times until we finally broke through. And then here, as you can see, just about an hour ago, we broke all the way through and came back and came right to it. So I'm going to leave that on there just because it seems to have become a pretty strong zone. So this morning, that zone is still there, 93 to 94, give or take. What the hell just happened here? Give me one moment. I don't know what just happened. My other computer like almost froze. Anyway, coming back here, we've got 50% of the previous day that we're holding. The orange power level is important to be above for the bulls. The VWAP is important to be above for the bulls. This swing would ideally get broken if the bulls are strong. And then we have this little pocket from 95 to 97 to get through. And then we have the close from yesterday right here at, within a tick or two, it's basically 4,400. And we do see a nice push right to close that gap once the market opens. So that would be a potential target to the upside if the bulls are strong here. Again, like I said, I saved this for last because it's just a clusterfuck of levels. So there's just a whole bunch of stuff. We've got, again, we've got that 43.95 to 97. We've got 43.99, 4,400, which was the close from yesterday. And then a little bit further, I'm not so sure I'm keeping this one up there. This one is done with. So I'll get rid of that. But then we're right up to the previous daily high, and then we're in the overnight highs at 44.11. And like I said, it's just a whole bunch of crap right within here. Probably don't want to be trading between around 43.65 and 44.10. So this like 20-30 point range is a whole bunch of chop. It might be a little messy. The market's going to open here in about 2 or 3 minutes. So again, like I said, unless there's some type of really strong momentum in the bullish side or the bearish side here, I'm probably going to be patient until we can kind of trek out of this zone. And once we do, I'll be targeting all these levels that we just talked about. So that's it for this morning. It's not quite a sexy market right now, but there's always opportunities. So we'll see what we can grab here coming into the open on our short time frames. So have a great day. We'll see you tomorrow.